Samsung is minus 8.77% today, and the reasons behind this move tell a bigger story about where global markets are heading. Welcome to MTRS_Market Pulse. It is July 18th, and today we are putting the spotlight on Samsung, a global leader in semiconductors and consumer electronics. Samsung is down 8.77% to $255,000 in today's session. Intraday prices ranged between $252,500 and $265,500. The long-term fundamentals for Samsung revolve around memory chip cycle recovery, foundry competition, and smartphone demand. Equity markets are responding to reports that Samsung profit surges over eightfold to beat estimates as RE boom fuels memory chip crunch. Let us look at the broader sector picture. On the geopolitical front, this comes as oil prices rise after Kuwait says Iran attacked water desalination and power plant, adding pressure to energy markets. This is adding a risk premium across energy markets and supporting safe haven demand. Central bank policy is at the forefront of investor minds. Equity markets are responding to reports that S&P 500 and NASDAQ end higher on cool inflation data, solid bank earnings. Equity markets are responding to reports that S&P 500, NASDAQ close lower on tech weakness but recover after hours on strong Micron earnings, Moo, Avgo, Google in focus, StockTwits. Looking at how sector peers are positioned. TSMC dropped sharply minus 2.81% to $398.23. Equity markets are responding to reports that Hyperion's big bet on TSMC, why long-term growth outweighs geopolitical risk, caveout RE. N2 node ramp is the most important near-term catalyst. Demand from Apple, Nvidia, and AMD exceeds current capacity. The geopolitical Taiwan risk is the permanent discount the stock will carry, but the fundamental earnings power is exceptional. Arizona fab progress and U.S. CHIPS Act subsidy clarity are the structural positives. Meta dropped sharply minus 2.79% to $646.01. Equity markets are responding to reports that 3 RE spend metrics that keep me buying Meta leading up to earnings report. 24/7 Wall St WhatsApp monetization is the next major revenue unlock, still largely untapped outside of India's business messaging push. AI infrastructure spending is heavy, but the ROI is visible in ad performance metrics. Any positive user growth data from emerging markets would be a catalyst. BHP dropped sharply minus 2.71% to $57.54. Investor sentiment is being shaped by China is taking on mining giants to reorder a $190 billion market, mining.com. Copper exposure is the long-term investment thesis. BHP's copper assets will benefit from the structural deficit expected this decade as the energy transition drives demand. Iron ore price and China steel output remain the dominant near-term earnings variables. Here is our analytical view on Samsung from here. Equity markets are responding to reports that Samsung profit surges over eightfold to beat estimates as RE boom fuels memory chip crunch. The HBM supply competition with SK Hynix is the defining story. Samsung needs to close the yield gap to win hyperscaler HBM contracts. Consumer DRAM pricing is recovering as inventory normalizes. Watch for any Nvidia or Google qualification update on Samsung HBM. Here is your market watch list heading into the next session. Keep a close eye on central bank speakers and rate commentary, and key economic data releases. Any one of these could be the catalyst that defines the next major directional move. We do the research so you do not have to hours of analysis distilled into actionable daily briefings. If that is valuable, please hit the like button. It is the single best way to support independent market analysis and help us reach more investors. Subscribe and turn on notifications for tomorrow's briefing. Drop your view in the comments. Are you bullish or bearish from here? That wraps up today's coverage from MTRS_Market Pulse. This content is for educational purposes only, not financial advice. Always do your own research. Stay disciplined, and we will see you tomorrow. That is our spotlight on Samsung from MTRS_Market Pulse. Subscribe for daily coverage of the world's biggest stocks.